But that's what I'm looking for in the bigger picture. So if we can hold on a pullback above one of these key zones, then I'm going to watch for a resumption of the rally in the S&P. Google, this was a really good example where we had time symmetry on a weekly chart. I had a 25-week decline, a 22-week decline, and a 23-week decline. So we had some timing here, and that gave me a heads up to the low and rally that was seen in Google. Okay, and I know that I recognize some of the people in here from the room, so if you were getting the update back then, you would have had that information in advance. And the upside potential in the bigger picture is still up there. So on daily chart, I'm setting up the pullback. This is another example in Google. Now I had one setup where we had similarity in price and time at this 602 area, and it gave us a $38 rally. Okay, I set it up again. Okay, oh, the thing that's important about this, or that stood out, was that we had an 11 trading bar decline and a 12 trading bar decline. So you had timing besides the price support parameters within this uptrend. So I set it up again, and we did see a rally, but it failed. And if you would have had a stop underneath this low, you would have been stopped out this morning. So sometimes the setup zones will hold and just not give you the target. This next example is in Monsanto. Now, I don't hear great things about the company, but it really had a wonderful stock setup. And this was done on a weekly chart, way in advance. If you look at some of these prior declines, you're going to see how similar they are. Here's a $15.22 decline. Here is $14.39. And here's $14.25. Okay? The larger trend was still up, even though the daily chart looked like garbage at the time. And I had two zones that I was watching for possible support. This is when I was told that I was insane and that I was wrong, and that I heard it here first from the people who claimed I was wrong. And I just told them, I said, my risk is defined, and if you get a buy setup, you take the trade. And Monsanto made the target off of that low. So far, I know it's a little bit more because I've taken this snapshot a few days ago. It's rallied a little bit more than 1807 off of that trade setup zone. Okay, S&P, this is an old setup. This is one, again, symmetry. You've got to watch this stuff. 155.94, this is S&P cash, versus 155.64. Okay, do you see the similarity of these swings? Now, I would have projected this one also and this one also, but once they're violated, I don't use them again. But between the projection of this larger swing and the price cluster that showed up, that overlapped all of these price relationships, and the timing cluster, I had timing between June 5th through June 8th for a low. June 4th was the actual low. Plus or minus a day of the time window is considered to be, actually it's part of the time window, plus or minus a day. And that means that the low was made in the time window. And you know what we've done so far. I mean, we haven't quite gotten up to the bigger picture target, but we have been stair-stepping up so far. And the new line in the sand is the July 25th low. Something similar in the Dow cash. The only thing that was different about this is that you also had time symmetry. 22 trading days, 13/12/35. 23 trading days, 13/03/57. Okay, and we seem to be on our way to the target. Don't know if we'll get there for sure, but we've had a nice rally so far. Okay, here is an example of a two-step pattern. This is in Joy Global. Now, a two-step is essentially a zigzag, and here's the zigzag into resistance that is correcting a prior directional swing. Okay, and I'm looking for a cluster of three price relationships, typically where the first swing of the zigzag is similar to the second. And then I also run an extension of a prior high to low extended upwards, part of that zigzag, and then see if there's an overlapping retracement of the larger swing. So we had a 618 retracement, a 1272 extension, and a 100% projection that came in at 77.48 to 78.34. So that was the setup. And then you just need to go down to a lower time frame chart and look for a trigger. Now this one, there would have been, it looks like, two entries. Here's one entry here. And after the initial decline, if you had your stop above the high, you would have been stopped out. If you had your stop above the cluster, you would not have been. So even if you would have gotten stopped out on the first entry, you would have seen another sell trigger on a retest of the zone. Okay, and this gave you a $14 decline off of a two-step pattern setup. Okay, so setup plus trigger equals entry. Once you enter the trade, you manage it. Okay, this is an example of why we use triggers. Now, I had a beautiful uptrend here in win. So I was going to set up another buy. Now, you keep the edge if you wait for the pullback. So I took all these prior declines and projected them from the high at that time and came up with a zone. Okay, 124.29 to 128.38. Put that out as a buy setup. And if you look at the next chart, you'll see that there was never a trigger against the support, because here's where we tested that support and you still had the moving average crossover that was suggesting the short side was still good. So was this. Okay. And we never took out a prior swing high. So basically, no harm, no foul. We did not see a buy trigger, so you never would have gotten entered into the trade. That's why we use triggers. Just to have about two more slides, and then I'm going to have some time, a fair amount of time for questions. As far as timing, Fibonacci timing, you can also use the same ratios that I use on the price axis of the market, on the time axis of the market. So I'm basically measuring, say, a prior high to high swing and then projecting forward using the same ratios and then looking for a clustering of the ratios. So let's see, this would have been maybe another high to high swing. This would have been another high to high swing. You basically had, okay, here was low to low. You basically had a clustering of time cycles that came due between, let's see, November 25th through the 30th. Okay, the actual low was made on the 25th, and you know, it was a pullback, a nice pullback into support as we tested the timing. And when you do see a timing cluster, what you do is you look for a reversal of the trend into the time window. So since we were coming straight down into this timing cluster, we were going to look for a low, and boom, you know, you saw a really nice healthy reversal in S&P. Timing clusters along with the price work will also get violated, and that just means that you'll go beyond those dates and you won't see a reversal. But most of the times you're not going to get a trigger, so you'll be filtered out of that trade. COP, this is another example of timing that you can go back over. And here's where I measured a prior high to high swing. 100% in time came in January 31st. I measured a high to low swing and then projected 100% of that from the Jan 3rd high. That came in February 1st. I measured a prior low, looks like low to high swing,